Hello and welcome to this session in which we will discuss internal control specifically over inventory. Now, what's the purpose of internal control? The purpose of internal control in general to protect the asset, ensure reliable accounting, ensure compliance with rules and regulation, and making sure the company is being run efficiently. Now, we're going to take those rules and apply them specifically to inventory cycle, just as we apply them to various cycles. So objective of internal control over inventory ensures that safeguarding the inventory, safeguarding it from theft, loss, misstatement. So this is protecting the asset. Ensure reliable accounting, accurately recorded in the financial statement. The numbers are correct. And for inventory, transaction has to be properly authorized, transaction properly classified and valued. So that's our main concern when it comes to internal control over inventory. Now, why control matters? Let's go over this specifically for inventory. Inventory could be a significant asset on the balance sheet, especially for retailers and for manufacturers. So any errors or fraud could lead to material misstatement in cost of goods sold, net income, asset valuation, equity, retained earning, and eventually the stock price, thus misleading investors. The key internal control areas to be explored in inventory will be occurrence and completeness, authorization and accuracy, classification, valuation and cutoff, presentation and disclosure. And for each one of these assertions, we would look at the definition, what does it mean and how does it apply, and work a quick example to make sure you have a good understanding of it. Understanding these key internal control assertions and the assertions in general would help you with your audit course, with your CPA exam. Why? Because you need to understand these assertions from a grand perspective, from overall, and how do they apply to each cycle separately. Now, although there are many commonalities, for example, for any asset, existence is important, occurrence is important, but completeness is important as well, for example, for liabilities. But understanding how they apply to each cycle would apply those assertions and it will help you understand them better. So I hope this will help you understand them better. Let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, farhatlectures.com.
Farhat Accounting Lectures is a supplemental educational tool that's going to help you with your CPA exam preparation as well as your accounting courses. My CPA material is aligned with your CPA review course such as Becker, Roger, Wiley, Gleam, Miles. My accounting courses are aligned with your accounting courses broken down by chapter and topics. My resources consist of lectures, multiple choice questions, true-false questions, as well as exercises. Go ahead, start your free trial today.
First, we are going to start with ensuring occurrence of inventory transaction. Here we're looking at internal control. What does it mean? All inventory transactions have actually occurred. Occurrence transaction. So what are the primary control? How can we have primary control to make sure that transactions are taking place? Well, one thing is segregation of duties, and this is a basic internal control. People handling inventory, for example, receiving the inventory, storing the inventory, transferring the inventory, should be separate from record-keeping functions. Why? This will prevent fictitious inventory from being recorded. If two individuals or two parties are to agree before a transaction is recorded, it means this transaction actually took place because one person actually did it and the other person is recorded it. Look at this image in front of you. Let's assume the male or the boy in this picture is counting. Let's assume this is the accountant, and the female, the girl on the other side, on the left-hand side, is actually doing the work, receiving, storage, and transfer. Together, working together, we know that the transaction took place. Segregation of duties is important. Other control, you want to use pre-numbered inventory document to track movement. Pre-numbered means if the document is missing, it's used. If it's used, something happened. Tell me what happened. Also, restrict access to both physical inventory and inventory record. Not anyone and everyone can go in and have access to the inventory or change the record. For example, if an employee receives inventory and also recorded it in the books, they could create fictitious entries. To prevent this, the employee who receives the good should not have access to the inventory of the accounting. And this is the example, clear example of segregation of duties. Other areas basically for occurrence is addressing theft risk and testing control. What's theft risk consideration? Theft risk varies by item. So when we are handling inventory, not inventory is the same. Certain items are more susceptible to risk than others. For example, low risk item will be considered large, cumbersome item, like you cannot steal a machinery. Therefore, the occurrence is easier, and it's easier to verify. If you bought a machinery, you could easily go and inspect that machinery. Then you have high risk items that are subject to theft, like small, high value item, jewelry, microchips. They could be missing very quickly. So we have to have preventive internal control to make sure we are safeguarding our assets. Like what? Physical controls like surveillance, secure storage, and limited access. So the audit procedures to test these controls will be observation. So how do you test this? Watch employee duties to confirm proper segregation. So if they're telling you, we do have segregation of duties, well, as part of the internal control evaluation, observe, see if that's happening. I mean, you don't tell them you are observing, obviously, because if you do, they're going to be doing their work. If they told you this is what we are doing as you are learning about the internal control, great. Then you would observe the process, and hopefully, if they are not looking, they should not be looking. Also, you would examine inventory movement procedures. You would look at transfer of raw material from receiving to production. You would examine these documents, determine, yes, exactly, they are doing exactly what they are doing. Therefore, I have some assurance that occurrence is happening. Occurrence is important. Occurrence is important. Completeness. What is completeness? Ensure that all inventory received is properly recorded in the accounting record. Usually that's not a problem for inventory, for asset completeness, because as a company you want to be aware of all your assets. You want to record all your assets. Nevertheless, it could happen. So that's why we have to be aware of it. So what we have to do is we have purchasing process integration. Inventory must be logged once received. So once we purchase the inventory, we have to have a system that matched it. Compare a receiving report to inventory status record. So if we have a receiving report for an item XYZ, we want to make sure that item is recorded in the inventory. For example, an auditor checks if items listed on receiving report dated March 28 were also recorded in the inventory ledger. So you want to know if we received an item, is it in inventory? If not, inventory is understated. Inventory is not complete. More about the completeness assertion deals with consignment. Goods held for others must be excluded from inventory. Goods held by others on the entity's behalf must be included. So we have to be careful. If we have inventory that's not ours, we're holding this inventory for others, that should not be part of our inventory, because otherwise we will be claiming inventory that exists or occurred that it's not really ours. However, goods held by others on our behalf, should be included. So how do you determine this? You review the document, you ask them, do you have any inventory held by others? If they say yes, I said, okay, tell me what they are. Then you'll have to go through procedures to make sure those inventory held by others are included and the record is complete. So you want to review procedures to identify and classify consigned inventory correctly. For example, if a company holds 100 units of inventory on behalf of a vendor, be careful in the question if they say on behalf or for. Auditor must ensure that they are excluded, otherwise you are overstating inventory. On the other hand, if the company has 100 units of inventory held on their behalf by others, then you'll have to include them. So you have to be careful about consigned inventory. Read the question carefully. Let's take a look at this multiple choice question from farhatlectures.com. The auditor should review and test the purchase cutoff procedure to best ascertain that what? A, B, C, and D. Let's review all of them and determine which one is the best answer choice. A company has appropriately included merchandise that it owns and ending inventory. Well, let's see. So is this the purpose for the purchase cutoff? Well, included merchandise, which is a purchase, that sounds right, that it owns in the ending period. Yes, to make sure it's in the ending. This sounds good, but let's look at the other one. Inventory sales are recorded in the proper period. First of all, we're talking about purchases, not sales. You can cross B out. The client has rights to inventory recorded on tags. This deals with not cutoff. This deals with rights and obligation. Rights, specifically rights if you have the asset or not. This is out. D and B is out. So we're between A and D. The client did not change the recorded counts after the auditor leaves the premise. What does that mean? This deals with accuracy. Did not change the recorded counts, because if you change the count, you're going to be changing the dollar amount. This deals with accuracy. So the auditor should review and test the purchase cutoff procedure to best ascertain what? That the company appropriately included merchandise that it owns in its ending inventory. That is correct, specifically in the proper period. What should you do now? Whether you are an accounting student, a CPA exam candidate, go to farhatlectures.com. Work additional multiple choice, specifically AI CPA questions. The best investment you can make is invest in yourself. Good luck, study hard, and of course, stay safe.